was when I ruled the world.
An opportunistic investor. I've been in the crowdfunding space since 2009, seeing various different applications. And we run a whole service provider that provides the means for a crowdfunding marketplace to work, called Crowdvalley in the US. I'm out of San Francisco. And we worked mainly in the US and in Europe, but also in Southeast Asia. And we see a lot to come with crowdfunding. A lot of things that people aren't really talking about yet. So the next couple of years are going to be really interesting. So throughout the platforms that we support, that's something that we haven't really counted, but it would be a very, very big number because we work with investment banks, asset managers that run online marketplaces. So just to give you a couple of numbers, our deals are typically in the multiple millions, and we see many of these deals every single month. Some of these deals are in the hundreds of millions as well. And we're not really talking about crowdfunding in conventional sense because startups typically don't raise $100 million. But crowdfunding to us is very broad. Essentially, a lot of what we do is take offline processes that don't work, or offline processes that are very much offline and contained to that space, and we bring them online. So meaning an asset manager that has, let's say, properties that they matchmake to investors. And then what we'll do is we'll provide the means that they translate that to an online marketplace. To your question, then, because we're not so much a marketplace ourselves as we are a marketplace of marketplaces, then we have over 100 of different marketplaces that we support that deal with various different assets. Then bundling tomatoes and bananas, that would give a big number. But at the same time, for example, some of these customers that we work with, they might be in the pensions sector. And some of these might manage a couple of trillions dollars worth of assets or something like this. So those numbers aren't really representative of the change. But at the same time, I think it's sufficient to say that we see the change not just in the early stage, but across the board, all the way from early stage, friends and family, crowdfunding, angel, VC, private equity, all the way to the LPs. Yeah, that's a good question. It's surprisingly little because I think crowdfunding and the regulations that have come about with crowdfunding, they've inspired the debate. But ultimately, even in the US, we have this new Regulation D 506C offering, which essentially means that you can generally solicit and generally advertise. At the same time, migrating an offline model to an online model doesn't necessarily mean that you have to publicly solicit investors. It might mean that you have an investment club online where essentially the investors are accredited investors, sophisticated investors, or even institutional investors. So the local regulation, it is very important in terms of bringing the debate and actually starting the conversation. But we see that within the constraints of existing regulation, just by essentially finding the right model that you can apply to an online domain, you can actually go very, very far. And ultimately, we think that what we do essentially revolves around three values. Revolves around creating transparency, access, and efficiency. And ultimately, creating those doesn't necessarily have to depend on the SEC's new rules or the FCA's new rules. It is more about essentially finding a model that fits that context. Like, for example, Founders Club and Angel List have found in their sectors. But there are various different sectors out there that can benefit from more access, efficiency, and transparency with new online models. Well, I'm not going to share yearly net revenues. In terms of essentially our position in this market, we've spun off this company, Crowdvalley, late last year with customers that we worked with already for 3 years. So it's a little bit of an oddity. But in that sense, in terms of our revenue model, for example, technology that we provide, we have a monthly license fee for the technology, different transaction-based elements like clearing of transactions and different types of things that happen in the back office with securities. Those are priced on transaction or on different services like investor accreditation, escrow services, or the different ins and outs of what you actually need to do when you're handling securities. And just a point on that, this crowdfunding market is very exciting, but just by translating something to the online domain doesn't change the nature of the transactions. So it's very important that securities are handled properly, that there is essentially the process that how essentially you do, for example, shareholder registry services and maintenance of these documents that you have to have. So I think that that's something that's always good to keep in mind that just by it being online doesn't change the requirements and the way that the process should actually be handled. So the conference is absolutely top-notch, and it's definitely great to be here. We actually have a couple of Italian customers that we work with. One of them just recently launched their private equity marketplace called Covo Funds. And essentially we see that the Italian market, Consub's regulation is a step in the right direction. Obviously there are, like with any regulation, things that need to be ironed out. At the same time, to that earlier point, we see that there are a lot of different models that can be applied to different sectors. For example, in Italy, there are a lot of innovative companies, but at the same time, there are a lot of small and medium-sized companies as well that have strong revenues, strong track records, and strong businesses and strong management. At the same time, they're having a hard time accessing the right type of capital. So these types of marketplaces in different regions, they might be very needed to boost essentially that access between companies that are significant in the economy. And startups and essentially the innovative growth companies, they are an integral part of that. But ultimately, regulations around startup investment in general, they are an iterative process, because ultimately investing in startups is a lot more cumbersome than investing in a company that might have 10 years of revenues to show an actual, let's say, 30 million of revenues a year. Then there's a lot more information in those types of sectors. So what we've seen in the Italian market so far is there's a lot of promise in the startup space, and we're very optimistic to fine-tune the regulations also that Consub has essentially issued and are developing constantly. At the same time, we encourage the entire marketplace to look at different areas that are needed for growth, not just the startup sector.